Markets are complex, analysis is cheap, insight is rare. Mark to market really means you stop pretending an asset is worth what you paid for it and write it down to what it's really worth. It's painful, it's honest, and most people in mainstream finance would rather not.
Welcome to Trading the Absurd. I'm Greg Cooper, a chartered financial analyst who has seen way more default curves than I care to count. With me is Sterling Studenmeyer, a finance and technology guy who's consulted with Global 1000 companies and worked in private equity as a successful turnaround and startup CEO. Between us, we've got decades across capital markets, structured finance, operations, and a healthy obsession with markets that most people have never heard of.
We're talking instruments, valuations, macro trends, and occasionally the genuine bewildering thing that somehow trades at par. We're here to find the edges, surface the anomalies, and highlight the outright weirdness mainstream finance intentionally ignores or is blissfully unaware of.
We challenge consensus thinking and try to find the risks that are hiding in plain sight. In today's markets, the biggest edge often comes from recognizing just how absurd things have become. Let's look at the numbers behind the noise. Trading the absurd.
Today, we're talking about the newest marketplace coming online, the prediction markets. So, Greg, tell me, well, what are prediction markets?
Prediction markets actually have been around for quite a while. The first one that I'm aware of was the Iowa electronic market, which came about, I think it was 1988, and it was kind of a brainchild of three professors at the University of Iowa. And they were basically looking to see if the wisdom of the crowd would be better than what was coming out of the various professional polling organizations. And it turned out that it was. They people who were willing to put actual skin in the game in terms of dollars, that their own money did better than the paid pundits who were really just kind of moving around hot air. So they've operated since then under a CFTC no action letter, and are still going on, though they've recently been kind of overshadowed by some commercial entrants that have entered the space.
Well, there's nothing to get you focused on what risk you're taking than actually having your own money at risk, right?
Amen.
And the pundit class is, infamously talkative, but not necessarily insightful. And I think it's interesting too that you got anytime I'm investing my money, anytime I'm starting a new business, whatever it is, I am hyper focused on every penny, where it's going, why it's going, what's going on. And that's good advice I got from somebody 30 some odd, 40 some odd years ago. But I think in the prediction markets, it's just kind of a different thing because, the tools to evaluate what risk you're taking and the ability to actually assess that is they just aren't there. It's too new. It's too different. There's no Black-Scholes option pricing model for prediction markets that I'm aware of.
Yeah, I'm sure there are some PhD types somewhere that are working on that, but as far as I know, that's been not been created yet. And it does allow you to monetize a view of things that, are rather nebulous, honestly.
Hmm.
And some of it is not. You have prediction market contracts that are fairly simple and straightforward, like, well, the S&P 500 be above a certain level by a certain date. So that's it's one more tool, in your bucket to kind of monetize a view on the index.
So,
That's
so you throw out the concept of a contract there, right?
Yeah.
And I think that's probably worth stopping and talking about for a second because, in the futures market, everything is contracts, right? The options market is contracts. But
Absolutely.
what is a prediction market contract? How's that different?
It's a binary option, basically. Technically, I guess it would be a European exercise binary option. So if you bet that whatever the event is that you're betting on occurs, so you're betting yes, you're betting against somebody on the other side who's say betting no that it won't. The prediction markets themselves are not like a sports book in the case of sports betting. They're just an intermediary. So this is more like a futures contract or an options contract where you've got somebody on the other side of the trade. Granted, the clearinghouse in both of those cases, um, protects you from counterparty risk. And that's something I guess I haven't really looked into in these. I'm not sure how much that the prediction markets actually do that. However, these are going to be fully collateralized, so it's not highly leveraged like it would be in the case of a futures contract where you're only putting up maintenance margin or initial margin. It's each of these contracts is only $1, and the price pretty much is reflective of what the participants' consensus view is on the probability of an event occurring or not occurring. So let's say
It's almost like a monetized poll,
yeah, it is. That's a good way of putting it.
which is what the Iowa electronic markets were they not?
Exactly.
But you use the word bet. That's interesting to me. Most people, especially somebody like you with a CFA, wouldn't call investing betting, right? But I've got a lot of friends who are big into betting on sports, and they're pretty clear that that's exactly what it is. So, what's different between a bet, right, and the prediction markets? And I think, from my perspective at least, one is that the house doesn't exist, right? There's no
Correct.
VIG and there's no odd setting by the house. So, can you
Correct.
talk and explain to people just kind of like what that difference is?
Um, wow, that's a great question. The difference between a bet and an investment, I would say, had to do more with the rigor of your analysis, making the decision, and your time frame. Okay, um, if you're going to put your money into index funds and close your eyes and not look at it for 20, 30 years, then yes, that's an investment, and maybe you are um, protecting yourself from heartburn and ulcers along the way, but um, that
Well,
maybe that's not
to
a
some extent, all investments are bets, but not all
yes.
bets are investments,
That is true. That is
right?
absolutely true.
And so the prediction markets are kind of this interesting hybrid from my perspective. It's like, you could go in there and do no research and just say, I'm going to take this position. Well, you could do the same thing in the futures market. You could say, I'm going
Yeah,
to go buy orange juice futures because I don't care what happens. I want to see if I can monetize it.
yeah,
But, most investors, right, they're looking at something data wise. I
yes,
say most because there are certainly anomalies out there. I mean, I'm a value investor. You're a
yeah,
technical investor, right? We should probably explain that to people. And so, as a value investor, I want to go beat up the numbers till they confess. I want to get, everything I can and understand this. But, I also own Tesla stock, and there is no way as a value investor I could ever justify that, not based on the numbers, right? So there is some wisdom of crowds component that goes in there, and there's some bet on the future. And what I'm really betting on is that Elon Musk is smarter than other people, mostly, you know. So,
I
which
think
may or may
that's a
not be
fair
true.
bet.
Yeah. I think it probably is, but I mean, there are things that are beyond anybody's control,
That
and
is
that's
true.
true here too, right? So,
Yeah,
so how a contract works in? So you're saying it's a binary yes no. There's a contract. It sells for $1, right? And if it's correct, you get the dollar, and if you're wrong, you get zero,
yes, that's exactly
and
right.
you pay $1 to buy it.
You pay whatever you pay less than $1. So if the odds are 64 40 against, you're putting up 60 to bet yes. The other, your counterparty is putting up 40 to bet no, and winner takes all less the bid ask spread and whatever fee
The
the
transaction
market
price,
is taking, and it varies a
right?
little bit by market. I mean, I think they all have bid ask spreads except Predict It, which does not charge a fee, but if you win, takes 10% of your winnings.
Hmm. So you mentioned predicted. Who are the key players in this space today?
The two biggest, I believe, are Kalshi and Polymarket. And Polymarket is a weird hybrid. It outside of the United States, they operate on the Polygon blockchain, and you basically have to use the USDC stablecoin to be able to, make bets, make investments, whatever, trade on that market. But they got shut down and fined pretty heavily a few years back, and then they went out and they bought a derivative shop, and then managed to get approval to operate as a derivatives market. So within the United States, they operate the same way Kalshi does, or one of the other, probably like ICE, the options exchange. I mean, they operate exactly the same way, and you're using, fiat dollars. You're not using crypto
Sure,
to be
sure.
able to do it. And you're also subject to all the know your
But those
customer things that,
ultimately translate into real dollars. But yeah.
yeah,
Um, well, all right. So you mentioned like a 60/40, right? What
yeah,
are the bid-ask spread mechanics here? I mean, you think about traditional stock price or option price, right? There's a bid price and the price that somebody's willing to pay, the ask price somebody's willing to sell for, and there's a spread
yes.
between the two. So how does that work here? I mean, how are the mechanics of that in traditional markets? It's to some extent, you got market makers. They're going to
Yes.
always keep a spread, right? Just so they have a margin. But and interestingly, I bet probably have market makers here too. We should talk about the participants here in a minute. But how do the big ass spread? How does it work? What are the mechanics of that?
Um, it's very similar. In the sense that the more liquidity that you've got, the tighter that spread is going to be. So I mean, the
Mm,
bid-ask spread, if you look at like individual stocks and you're buying one of the components of the S&P 500, it's tiny, maybe
yeah.
a cent, maybe less than
Hmm.
that. Okay.
Yeah.
It's very, very tight. But if you go and buy a micro cap stock, then potentially that's really wide. And many of those things, barely trade. And, one of the
Right.
things, if you're trading in volume, and the institutional guys always have to worry about this, is does your trading move the market? That's something you want to avoid.
Sure.
So if you're trading something that is very illiquid, um, it's going to have wide bid-ask spreads. And when you go to buy or to sell it, if you go to buy, it's going to raise the price. And if you go to sell, it's going to depress the price.
So that means then that the Super Bowl winner is going to have a very narrow spread.
Yes, correct.
And who's going to win House District 13 for the state of Alabama?
It is going to be a pretty wide spread, would be my
Assuming it's
guess.
even there.
Yeah,
Which is interesting because that kind of leads me to a different question we should get to, which is like who actually comes up with what the contracts are, and how are the rules set and that kind of stuff because it's not there's not like a clear cut market value of those things at the date, the strike date, right?
right.
Um,
So, well,
and
right at the inception of the contract, I mean, it's in the future. Whatever is being traded, whatever outcome is being traded is definitely in the future. And you really have to, as to who sets it, I I'm unaware of any of the markets allowing people to, like outsiders, to create contracts to be traded. I think it's all done in-house by their own staff. And how they go about making those decisions is not something that I've seen any kind of information about. But I'm assuming they have people or teams of people who do this as their full-time job. And in some cases, it's going to be fairly obvious, like what are the political um, races that are coming up. That's pretty standard. What are the economic reports that are going to be published? That's on a calendar that anybody can go look up. That's all going to be known. What is the NFL schedule for the next year? That's also known. So some of it, is not really hard. Not all of them, but some of them have these like popular culture categories. Kind of weird things like will I just saw this in the news recently. Like, um, I didn't follow up on this before we got on, but I saw something that indicated that there was a long shot bet that would Trump praise Allah before, on his Easter tweet. And he did apparently on Truth Social, and somebody won a long shot bet on that. So that gets a lot of that stuff. When you get into the popular culture thing, will a celebrity or a public figure say or do X or Y, in a certain venue, um, that reeks of insider trading to me. That's very sketchy because, if you want to go reward somebody and you tell them to bet a certain way and you just make sure that it happens if you're one of the people that is subject to one of these contracts. So I
Right.
think those are really, really sketchy, but I think there's potentially a lot of value um, in terms of these things around politics, around markets. It's like one more instrument to help uh, hedge exposure in normal, stock, bond, futures markets, options markets, whatever. Potentially, I haven't seen any on real estate yet, but I'm sure you could do them as well around real estate outcomes. Um,
Hmm.
but some of the popular culture stuff to me is just that feels a lot more like gambling. And it also seems like it's more ripe for insider trading than these other things that we've just been talking about.
Yeah, it's more random than structured.
Yeah.
Is probably the right way of saying it. And so, you know, celebrities do crazy things for reasons nobody could possibly understand, right?
That's right.
Including, I think, in a lot of cases themselves, they probably don't know why they did that. I
Yeah.
bet Kanye West wonders why he did a lot of things. But so, in terms of then, setting up these markets and working as an efficient market, right? As my degree in finance, I was always taught that to have a perfectly efficient market, you need perfect information, you need no transaction costs. So the transaction costs here seem pretty de minimis
Mhm.
relative to what they used to be, but I think that's true of most transactions these days. I remember back when my broker got some big commission when I bought a stock, and that just really torqued me because he was the one recommending the stock, right?
Right.
But in terms of these markets being really efficient, I assume they are. Um, but I mean, what are the what are the biases that are kind of built into these markets in terms of how people make decisions on what they're going to do? And that one's probably the most interesting to me of all. You know is there some trend? I mean, you and I are both sort of contrarians,
Yeah.
and for different reasons, but we're both contrarians, and we're also pretty cynical. So, I look at it and say, well, okay, there's got to be a greater pool out there than me. I hope, I pray. But finding that greater pool is the hard part. And, then I want to separate them from their money. And that's really what this drill is all about. Because in this case, it's not like, it's not like we're funding a company that's going public or,
Right.
something like that. So in terms of that, how big are these markets? How much influence do they have? As you said, there's the opportunity for somebody to you know, effectively do insider trading because, they can pick what they're going to bet on. But I don't think that anybody can possibly know the outcomes. Back up. Anybody who's setting the actual contract up would know the outcome of most of these events unless they've got some kind of insider connection, right?
Yes.
And that's an interesting and troubling thing. If somebody who worked at one of the exchanges also has a buddy at the White House is telling them this or that, or or in Congress, I'm surprised that there's not a Pelosi market. That would be a very interesting one, the Pelosi prediction market.
We're not going to get to all of that in this episode, but I definitely want to do another episode where we talk about uh, congressional insider trading, about Nancy's spectacular long run and how she has part-time been able to beat not only the indices but also Warren Buffett. Uh, and what should a politician actually be allowed to trade, if anything? And we'll unpack that in another episode. Right? We won't go down that rabbit hole
I
right
mean,
here.
you could argue if Trump were out there trading a bunch of these things in that market are to do with what decisions he's going to make and what he's going to do. You could
Right.
argue that he's gaming this all day long.
Yeah.
And part of his negotiating style is just being wildly unpredictable because then the other side, has no idea what's really going on. That's just his nature.
Yes.
But maybe it's not his nature. Maybe it's what he learned that it works in negotiation. But here it's very interesting because that would give him at least a tremendous bias. I just don't think he's really got time to go out and be trading on call sheet right now. So assuming away those risks, right?
Yeah.
What are some of the other things that like how do we find irrational players? How do we find people making those irrational bets? And therefore the ability to find something that's mispriced and arb that to make a profit.
That is the question. It's
Yeah, well, just answer that for me so I can go make a bunch of money on this, and we'll talk again later.
well,
But I mean, how do you know that? That's you know, what are the
uh,
mechanisms? I don't think they exist yet for the most part.
no, I don't think they do either. I mean, it's um uh monkeys as a group are, in a mob are fairly predictable, but any individual monkey is pretty random in what they do. And granted, this is,
To us, at least. Yeah,
I'm sorry, what?
to us at least.
Yeah.
Yeah, sure.
Um, so, and that's sort of, is what underlies the whole idea of the wisdom of the crowd. What is the consensus
Mm.
view when you go into this? Everybody's going to have their own biases for or against. Um, and how you predict the um outcome of a congressional race or a presidential race is, I mean, people have been trying to do that for, probably hundreds of years, many, many hundreds of years, if you take it like beyond before the existence of the United States. And I think I read a reference to this as well when we were beginning to research this. The prediction markets around elections actually used to be a thing like in the early part of our country's history. So like in the early 1800s, but I didn't read enough to get all the detail. I just know that it
Mm.
existed.
Yeah, well, not
So
only that, there used to also be, you literally would buy alcohol for the voters in a certain area, have a big party, and effectively buy their votes. So that'd be a great way for you to game the prediction market, would it not? Except
absolutely.
that you're spending your own money to promote the outcome, so maybe that doesn't really work, right?
Well,
The seat in Congress is probably worth a lot more than winning on the prediction market.
yeah. Well, the not necessarily the salary that they make, but all
No,
their various other,
the
sources
tips,
of income.
the tips. Yeah,
Yeah, the
yeah,
tips. That's one way of putting it.
yeah.
So, yeah.
As a friend of
Uh,
mine once said that working on he was in Miami. Yeah, being a commissioner on the Miami City Commission pays $12,000 a year plus tips, which is, a pretty good description. I don't know what the base number is anymore, but I'm sure the tips exceed it by a long margin. I
huh?
wonder if there are no tax on tips to apply there, but anyway. Um, so what are some places you could use the prediction markets, like for hedging and investment? I mean, is there a way to kind of cross this over into maybe what I'll refer to as the real world, but like
I
your
think
business
absolutely.
or
Absolutely. And one of the things that we looked at the other day when we were, kind of perusing Kalshi and Poly Market is there was one contract that, with layoffs in the tech sector exceed 446,000, over the next year.
Hmm.
And it's like, okay, well, you can look at that a couple of different ways, several different ways, actually. One, so are these layoffs seen as a cost-saving measure that would be expected to float through to the bottom line and hence cause fundamental investors to see this stock as a better buy and hence bid it up? Or is letting go that big of a section of your workforce going to lose so much institutional knowledge that you're going to actually fall behind in terms of progress and innovation and things of that nature. Hence, the stock would, go down. You're going to have poorer financial performance, and then investors will sell the stock or unload it, or depending on their focus, maybe underweight it if you want to use the institutional terminology. Or if you're actually a coder working for these companies and you think it's a good chance that you're going to get laid off, you could take a
Yeah.
long position. You could bet yes, and depending on how heavily how many contracts you bet, you can
Hmm.
make a sum to at least give yourself a month or two worth of cushion beyond whatever severance they give you to continue looking for a new job. And another thing would be with many of these political contracts. I mean, you mentioned that I'm a bit of a cynic, which I certainly am. I think lobbyists have way too much power over politicians in our country, and you could see a lobbyist. Many times they'll be paying, both candidates. They will be making donations
Oh, of
to the,
course. Yeah.
they'll be playing both sides of the aisle because they don't know for sure which one is going to win, and they want to,
Well,
that,
it's interesting if you think about publicly traded companies, right? They're
yep,
insider trades. For anybody who's a significant player in the management of the company, it has to be in their SEC filings. It's generally available to the public. So kind of makes you wonder, right? Should the prediction market trades also be exposed for the same reason? If I
oh
if
yeah,
I if I found somebody who had put up a bet that, Tesla was going to go south by 20% or something, I don't know, whatever it is. And I'm Elon Musk, all I have to do is go make one bad announcement, collect my money, and then go back and reverse that announcement.
exactly,
So,
exactly. You know,
mm.
that's that there definitely needs to be controls or at least visibility as far as the insider trading goes. I
Well,
mean, I don't
within
think
within the
Congress should,
markets,
huh?
well, let me ask you this though. Within the market, within the prediction market,
Yeah,
could you diversify in some way,
absolutely.
shape, or form? I would think that would depend on the contracts that are made available by the people who run the markets.
Yeah, you absolutely can. And one of the things that I don't remember if we talked about this, but the actual definitions, you need to go read the fine print on these. It's not like a
Mm.
standard, you know, call or put on a, whatever on Tesla. It's not simple. It's not overly
Yeah,
complex, but you need to know the details and you need to know what constitutes a yes result versus what constitutes a no result. So you need to read the fine print on these, or else you could find yourself, thinking you've won when in fact you've lost. But I'm going to screen share here and we're going to look at a few of these things and we can kind of flip through it. First one we've got up here is Polymarket. You see it?
yep, I see it.
All right, you can see across the top, you've got politics, sports, crypto, esports. Wow, that blows my mind. We're specifically looking at Iran right now because, of course, this is probably the biggest news going on at the moment is the, U.S. and Israeli operations against the terrorist regime that has been in control of Iran for almost 50 years. And you have, we were looking at this. Let's
I think
drill.
you meant to say freedom fighters, but yeah, go ahead.
Is that what I meant to say? Really?
I think so. Yeah,
Okay. All right. Maybe you're right.
yeah.
Maybe you're right. But you
Maybe
look
you're
at
right.
this, and this one is interesting. U.S. forces enter Iran by December 31st or April 30th. $357 million traded on this contract. Okay, so that's not nothing.
Yeah,
That's a pretty healthy, that is a pretty healthy bit of liquidity. And currently it's in review, and we were reading on this a little bit, and it's disputed because the contract actually says that um, only U.S. military personnel who deliberately enter the terrestrial territory of Iran for operational purposes, e.g., military, humanitarian, etc., will qualify. Pilots who were shot down or other cases in which U.S. military personnel do not deliberately enter the terrestrial territory of Iran will not qualify. So, I mean, it was recently in the news that the plane got shot down and then a major effort was undertaken to go rescue the pilot. So clearly there are people who are, raising their hand and saying, hey, this doesn't count because of the specific exclusion of the pilot, but, it doesn't specifically exclude, the rescue mission that followed on from that.
yeah.
So it'll be interesting to see how that gets resolved. And
Right.
this
Depends on
is,
your interpretation, and everybody's going to interpret it to whatever they think is in their best favor.
Oh
It
yeah.
sure looks like, though, that the interpretation is that, yeah, they entered,
Yeah.
regardless of the reason or, whatever. Yeah.
Yeah, I think I would probably come out on that side of it myself, but I mean, that'll be interesting to watch. And you have all these other things. Will the Iranian regime fall by June 30th? It's only currently at a 10%, and you've got a relatively small volume, 28 million.
But again,
Uh,
it's definitional. What is the Iranian regime?
yep. So we'll go look. And
I
actually,
bet they,
they
I
give us
bet
a
the
chart.
Iranians wish they knew that. I mean, I don't know that we know that.
Yeah,
Um, but it sure looks like that's interesting too if you look at it. I mean, the yes is at 11 cents and no is at 91.
yeah,
So that would tell me that, you know, different question we should come back to is why does that sum to more than a dollar? But what, what that kind of tells me is everybody believes that the regime will fall, or will not fall.
yeah, yeah.
Right. But that's because I don't think any of us can define what the regime is. Personally, I don't even understand why somebody would have put that up as a trade because it's one of those things that's just not clearly defined, but it's a good example of the issue we talk about.
Yeah,
But
absolutely, absolutely.
do you have any idea what the average trade is that people are doing here?
No, I don't, and I don't know if that information is available. I mean, you see almost 28 million of like total volume,
Yeah.
which is material, but it's a dollar at a time. But I don't know what the average number of contracts traded are.
Yeah.
And you can see that, you've got, that's interesting. What is max?
Well, you don't have any money in your account, so none.
Well, I guess that's right. Okay.
Because you're not even logged in. But
I'm
yeah,
not logged in.
you could, but
I'm
if you
not
had
logged
money
in.
in an account, you would be able to do that, right? Yeah.
Yeah, I guess that's
Um,
right. I guess that's right.
it's
But
just it's just like the one-armed bandit. How
yeah.
much you got? Um, so yeah, it is interesting. I'm gonna bet that most of them are smaller size trades, probably between like 5 and maybe $20. People think of this as, fun, not an investment strategy. And then at the other end of the spectrum, you probably have investors who really think they have an edge. But it would also strike me that, your edge would go down the more money you put on this, unless you just had true inside information.
I've read some things that indicate that you've got a fairly big institutional presence on Kalshi
Mm.
and also on like interactive brokers that are forecast markets as well, but they are much more purely like economics, politics,
Mm.
financial markets and whatnot. They have some, the economic indicators are fairly, obvious kind of things, but they also have what's interesting. They've got like,
Daily
climate type
temperatures.
things. Huh?
Yeah. I like that because nobody can manipulate that number, at least not in the short term.
Oh,
Um, yeah.
sorry. Whoops. Is that coming back on? Do you see it?
It disappeared. So
Okay, let
not
me put
sure
it
where it
back
went.
on. It's my
Maybe to bring it back up.
computer kind of had a brain fart there. Sorry about it. You see it?
There it is. Yep.
Okay. So you've got, you have some like daily temperatures and things, and that was something. Well, here's a weird one. Look at this, Harvard tuition. If you've got
Mm.
a kid that is planning on going to Harvard, this is maybe something that you can do here to kind of,
I promise you it's not going to go down.
yeah,
So if you
yeah,
figure out where it is now, yeah.
yeah, I'd say you're right. And okay, this is interesting too because this shows you the bid ask. Okay,
Hmm.
you know, the, this shows you the open interest. Okay, so how many contracts actually exist? So you've got a long and a short. You've got one person who bet yes, one person who bet no. So this tells you like, what your open interest is here. And it's that's helpful. That is definitely helpful, when you're
Yeah,
looking
and
at
it's
this kind of
interesting. I
stuff.
mean, you would think, I don't know what the current tuition is, but looking at this chart, I'm going to say it's $58,000. I mean, just because this starts at 59, right? So
Right.
maybe it's 58. I don't know. But I wouldn't be surprised if it were probably somewhere in that vicinity. And I This is one though. It's interesting. I mean, you could actually go get some data. You could get back data on this. You could look at
Uh-huh.
the last 10 years of data. You could develop a trend line. You could do a growth curve. You could do some of that really deep technical stuff that you love to do,
Yeah,
especially in Python or something, and come up with a plan series that says, okay, this is where I think this is going. But boy, there are other factors in there. I mean, if I remember correctly, they just did a huge bond issuance. Their endowment is worth insane amounts of money. I forgot what it is, 60, $70 billion. But
yeah,
their liquidity is a different problem, right? Because a lot of that's in very, very long-term
right,
things, especially like
right.
in private equity funds, et cetera.
Yeah,
And
you
so,
a lot of your
yeah.
endowments over the years have shifted much more towards, I think it's the Yale model they call it. So it's much more heavily invested in alternatives,
Hmm.
which are absolutely not liquid, so it's more
Correct.
of your PE that you said, real estate, private credit's a thing, but all these different things that the retail investor is not going to be able to put their money in, though there is this big shift towards breaking up alternatives and making them more liquid and smaller bite sizes so the retail guy can get a piece up. And but that's a little off topic, and that's we can come back to that another day.
Yeah, because I'm pretty sure the retail guy isn't going to get a piece. He's going to get the shaft.
Yeah,
Um,
no doubt.
if those things start happening, I know the private equity world well enough to know that they're going to load those guys up with all the losers. And but I mean, they can't do too much of it because then they'll never come back. But anyway, so
Yeah.
yeah, so if I were, if I were average Joe with a couple $100 that I was willing to go play with, or $1,000, or I don't know, depends on person's, everything,
Right.
their wealth, their perspective, whatever. But if they had five or $10,000 and they were willing to go do this in prediction markets, how do they go about doing that in terms of one, choosing what contracts, right? That's an interesting one. Just like because some of the contracts, like good example was the one you said about troops entering Iran. You know, I just, my sense would be if the outcome could be disputed, boy, I don't think I want any part of that because I don't get to decide how it's going to how it's going to
Yeah.
get resolved, right?
Yeah.
That's why I love the weather ones. It's like, okay, nobody can argue that. But the so I guess what I'm getting at is, if a person's listening to this and saying, "Oh, this is very interesting. I'd like to go do this." What do you do? How do you start? And how do you not get killed
I'd
or
say
end
you
up as
start
roadkill?
by focusing on something that you know a little bit about. Okay, to where
Always
you've
good advice. Yep.
don't, I would not randomly, if you're not an economist, I wouldn't necessarily jump in and, make bets on what the Fed is going to do, or, what
Although your
GDP
odds are
is going to
probably
look
as
like.
good as any economist on that one. But yeah,
Well, yeah, fair enough, fair enough. I mean, what's the joke that,
all economists laid end to end still would not reach a single conclusion.
the other one about, why did God create economists?
I don't know why.
To make weathermen look good.
Yes, exactly. Um,
Sorry, Michael, my dear friend Michael, who is an economist. Never mind.
I don't think economists are even offended by that, because they're pretty sure that we don't understand what they do. Um, and But I mean, as jobs go, being an economist or a weatherman's a pretty good one, right? Because the accountability factor is pretty low. I'd say the only place where accountability is lower is in politics.
Yeah,
But
government as a regulator, right?
yeah,
Yeah.
maybe.
And that's a discussion to be had, totally unpacked on another episode, and we can go deep down that rabbit hole. Uh, but in general, what should you trade? You should trade something that you think you have some knowledge of,
Right.
okay? And you should obviously not trade more than you can expect to lose, and you should um, I don't know if you're able to do stop losses on these markets or not, the way you could in like with stocks or options or futures, and let me find something that's got a reasonable amount of movement. We were, where were we? Where we were just had really a decent chart on it. Is it
While
this
you're
one?
looking, I just, throw out a couple of things that you and I've talked about before on this, right? So I mean, you can hedge real world exposure to some extent.
Yes.
Um, assuming that the trade exists and assuming that, you know, you're concerned about that exposure and you understand how those things correlate,
Right.
you could, you are always going to be subject to an insider trading moral hazard here where, somebody knows the outcome already, or has the ability to influence the outcome, maybe is a better
Ah,
way of saying it. Um, if you're going for long shots, think of it like the lottery, and your odds are probably just as good or bad,
absolutely.
as the case may be, as we all know the lottery is a tax on people who are bad at math. Um,
Exactly.
and then, you could, if you can find a way to diversify your risk, that's a great way to do it. But, this being in a market and a market that's probably going to be pretty efficient, I think those hedges are going to be few and far between. Uh, you know, and sometimes it just doesn't exist. Like, the Super Bowl, there's really no way to hedge that, right? It's one or the other.
Um,
Um,
I did take a look. I mean, we'll have another discussion and go more into the comparison between these markets and your normal sport books and whatnot. But I pulled up Hard Rock Bets and kind of compared just off the top one of the Major League Baseball games, like the next one that was coming up, and then I compared it to the odds on Kalshi. And when you take the VIG out of the odds, if you calculate
mhm,
the odds, you take out the VIG of the sports book, it was close. It was, basis points apart, maybe about a half a point apart in terms of the odds. Um,
mm,
so at the moment, I, at least on that one particular case, that looked efficient. I think that and that was a money line bet. So just as simple as it gets, who's going to win, who's going to lose.
sure.
I think you may have a little bit more friction when you look, go from money line to like point spread. And I know there are people doing this already and doing it in a big way, utilizing a lot of machine learning and, data science techniques and whatnot to download data from various APIs and kind of seeing where the friction lies and seeing if it is actionable. Is the inefficiency something that you can actually exploit and make a profit from?
Well, that
So
would that would kind of lead you to also, right? The big question that's in the back of my mind as a technology guy, is how are people going to leverage AI here? And interestingly, we've seen these kind of moral questions on AI, like, if an AI platform is tasked with doing something that would hurt another AI platform, it generally won't do it. And we've even seen cases where AI in some lab settings have resorted to lying and doing other things for self-preservation purposes. So, can AI be morally corrupted to find a way to beat the system here? And my point would be, well, unless AI knows something that you and the market don't, the answer would be presumably no. You can still give you an edge, right, through quantitative analysis, technical
right.
investing, whatever. But it doesn't strike me that it could be, oh, okay, well, I'm going to tell the AI to influence the outcome, unless, of course, the AI can figure out how to, kill the politician who's in the front running for a particular election or something, so that. And then of course that brings up another question, right? As like you're showing right now, the Democratic presidential nomination. What if some lunatic goes out and shoots Gavin Newsom, and assassinates him? What happens here, right? I don't know. I know what happens to Gavin, but I don't know what happens here in this market, right? And so that's a very interesting question. And so I would say, you pointed out earlier, read the fine print. I
Yeah.
would say you got to read the definition of the determination and or the exceptions there too really carefully because, you know, I mean, if nobody's covered that, then we've technically have introduced a moral hazard if Gavin's in the lead to assassinate Gavin, which that's a big problem. We should not be introducing a method that somebody can monetize that. it's kind of like the old thing about I can buy life insurance on anybody. So I could buy life insurance on your life, and then yeah, I got good incentive to eliminate you. So
Yes.
I that's effectively what this is. I mean, it's kind of mind-boggling that there are so many things, there's so many scenarios that you could think through where this could go horribly wrong. But I would also be willing to bet that being a market, it's going to be self-correcting really fast.
Yeah, I mean clearly there's a fair amount of moral hazard here, but no more so than some of what purportedly went on during 9/11 where, undiscovered entities or individuals bought put options on airline stocks, knowing that the attack was coming. And one of the I think it was the Daniel Craig remake of Casino Royale starts out with a similar scenario where the new plane was being unveiled, and bad guy got paid to blow it up, and of course Bond stops him, and the Le Chiffre, who was betting on that, of course lost his however many hundreds of millions that he had riding on that. So
Right.
these
Right.
things can already happen now, but it's just not at the individual level. It's not as simple as assassinating one individual. Um,
It,
but
it does strike me that one place you could maybe get some leverage with AI is to take advantage of the fact that it can consume massive amounts of data and information
absolutely.
so much faster than you ever could, right? So if you ask it to evaluate, just what are the things that could go wrong with a particular position
Hmm.
based on the way the outcome is defined or the definition of, what the outcome is, that'd probably be a first level screen right there to say, well, like the one about troops entering, right?
Yeah, that's a great idea. I hadn't thought about that, but that's a great idea is have your robot go and check the wording of the contract before you decide to go long or short on it. And if
Yeah.
it's going to be something that's got a high degree of uncertainty or ability to be disputed, then maybe you skip it and do something else that where you've got more confidence that once it's decided, it's not going to change.
Yeah. Yeah. I think, I mean, I really do think that's one of the things in this market, just being immature, that people have really got to be guarded about, right? Is making sure you
Yep.
understand how the outcome's going to be defined.
Yep.
Um, and what's the moral hazard for somebody to drive that outcome, which, of course that exists today. And we see that in sports betting, where people throw games, things like that.
Yeah, yeah. I mean, that's why, pro players aren't allowed to bet on their own games, or at least they're not supposed to be able to.
Correct. They're not allowed to. That doesn't mean they don't.
Yeah,
Um,
exactly.
Well,
Exactly.
yeah, and the prediction market's very young, right? So there's not a lot of historical data out there for anybody to look at, but which would, I guess, would make it pretty hard for somebody like you in the technical side, right, to do the back testing required to be able to say, okay, this is, this pattern indicates whatever.
There
Um,
are APIs where you can download historical data. It's on my to-do list, but I haven't had a chance to get to it yet. And
Need to get your robot on that one.
yeah, exactly. And I just recently did a Genic AI for algorithmic trading course that Quant put on, and one of the instructors was a guy named Stefan Jensen. He's another CFA charter holder, and he wrote a book on machine learning for financial markets. And one of the things that he some of the inputs that he uses are data from Kalshi and from Polymarket. So I believe he said he doesn't actually trade these markets, but he definitely looks at the data as um, a potential input, predictive input to, the stocks and options that he
Mm,
is trading.
yeah, makes
And,
sense.
that's if you could download the data through the API, that's pretty simple to put it into a number of different basic machine learning algorithms and just see what patterns you find.
Yeah,
And that's the thing is the robot, can do a lot of that heavy lifting. But to your point, there's not years and years and years of data here, so it's not going to be very statistically robust. But it's growing day by day, and I'm sure there are people out there that are leaps and bounds ahead of us, but in terms of how they're doing this. But as all things happen, it eventually secrets get out and people figure out how to do it. And you would think that any edges would ultimately be arbed away, over time. One thing
You
I
would
was
think
going to
so,
say,
but they're
oh, go
still
ahead.
there in other markets too, right? So,
Yeah, yeah,
um, the people will always be hunting for that edge. They'll always be looking for that opportunity.
of course. And, I mean, one of the good things is institutional money is they can't um, they can't get size in a lot of smaller positions. They tend to avoid, micro caps and things that are not liquid. You can't put $1 billion to work in micro caps very easily. You certainly can't do it without moving the market. So, um, kind of
Good point.
the smaller something is, the less likely you're going to have institutional presence. You will have less liquidity. You will have wider bid-ask spreads, but you're probably not competing against the smartest money if you're trading the more illiquid things.
Well, see right there, that's what tells me this is a great place to play because if you're, but I mean, here's the thing, right? The bigger players in this, the more sophisticated players,
Hmm.
I bet you they're making bigger bets,
Oh
right?
yeah,
And so they are moving that needle. So you're really competing with them, not with the person who set it up with $20 and said, "Yeah, I think this will happen." They probably just took whatever the price was and went with it because they thought it was going to go the other way because it's a binary choice, yes, no.
yeah,
Yeah, so I mean, these are all things we don't know.
yeah.
But I think this is a topic that probably deserves a lot more discussion and a lot more analysis and rigor.
And we can easily turn this into a number of episodes and drill down on the different rabbit holes that it leads us. So
Yes. Well, I think that should probably cover the topic for today, at least in terms of an introduction to this. And we have a lot more work we can go do to get smarter on this and share that with all those who may be listening. But I think that's our wrap for the day, and we look forward to seeing you next time around.
absolutely. So let us know, please. Subscribe, leave us a comment, tell a friend that reads the footnotes. There are our kind of people. We do want to hear from you. Tell us what markets you're watching. Tell us what you think is absurd right now because we love that stuff. And drop it in the comments, or we just got our URL. So we are at tradingtheabsurd.com. So leave us a note and we will dig into it on the next one. So remember, the market doesn't have to make sense. It just has to be wrong in a way that you can exploit. So I'm Greg,
I'm Sterling.
trade the absurd, and we'll see you
All
soon.
day. See you.